We turn our focus to the central bankers gathering at the prestigious annual economic symposium in Jackson Hole this week. Central bankers are likely to discover they are more split than at any point since before the pandemic. Take a look at our next report to understand the growing divergence in global rate paths.
For years, the Federal Reserve, the European Central Bank, and many of their developed world counterparts had quite similar evaluations. Interest rates were lowered and money was poured in when the first 2020 COVID shock hit. Soon after, they launched their most aggressive tightening policies in decades to combat inflation in a synchronized way. Today, authorities are more divided as they consider the risks of price pressures staying too high. With the danger of sending their economy into a slump, inflation has fallen, but is still above the 2% objective. The background becomes more unpredictable for investors as a result. More than 2 months have passed since the ECB cut its benchmark rate, but the Fed still hasn't moved. A policy-setting body of the Bank of England acted on August 1st, but that decision came down to a razor-thin 5-4 vote. Last month, Fed Chair Jerome Powell said forecasters have been continually surprised, reassessing the efficiency of monetary policy, and its transmission to the broader economy is this year's conference focus. The event usually includes representatives from major central banks and plays a role in shaping investor expectations. The decision on when to cut and by how much becomes much more difficult due to contradictory signals about the U.S. economy. For example, the July jobs data in the U.S. was less than expected, while retail sales for the month exceeded expectations. In the days leading up to Jackson Hole, that is mirrored in the bets in the futures markets, this year has seen big swings in one-year federal funds futures. Last Monday, the futures 30-day realized volatility hit the highest level since June 2023. Back in June last year, the volatility rose due to the regional U.S. banking crisis. Today, that number is about 3 times higher than the average of data collected from 1991. This seesaw in bets shows extreme uncertainty. Still, investors will be cued in to understand central bankers' views on rate paths. Business Bureau Report, WION World is One.
For latest news, download the WION app and subscribe to our YouTube channel.